Be Wealthy and Smart, episode 573.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about what's going on with the stock market, because I see a lot of confusion out there. People are wondering, what's going on? Are we going lower? Are we going higher? What's happening? Well, let me just give you a little bit of background. A lot of the reason that the stock market climbed 18.5% earlier this year is because of two things. I call them the two agreements. One was that the Federal Reserve said they were going to cut interest rates by 0.25%. The other is we were expecting a trade deal with China. So based on those two things, the stock market continued to climb. When those two things didn't happen, those two agreements did not happen, the market had gone up expecting those things to happen, so it's only natural that it would have to reprice itself lower. And that is exactly what I told my VIP experience group on our monthly webinar on May 9th. Since that time, the market's come down about 6%, and we're having a little bit of a rebound here. But nonetheless, we still have to look for fair value in the markets. Now, where is fair value? That is the question. Let's look at multiples first. So the average multiple of the S&P 500 has been around 15 to 17 historically. We've gotten up to about a 22 multiple. That just means that we're way over the averages. So we're above average on valuation. That means stocks are expensive, and therefore they need to come down to get more in line with what is normal valuation. We also have seen where some of the largest companies are having difficulty. Some of the FANGs, Facebook, Amazon, Apple, Alphabet, Google, they're having some troubles. And so because they are market weighted, that means that they carry more weight in the index than the average smaller company. So when the big companies are pulling back more and are having trouble, that's going to bring down the average. We have this talk of antitrust that is happening, and there may be further investigation and possibly even some action taken for antitrust. I tend to take that seriously because I was around in the days when Microsoft went through its antitrust situation, and it wasn't pretty. These things have a way of grinding on the stock and making people want to stay away from it because of the uncertainty until people really know what is going to happen. When you get stocks like the FANGs that have been going up for a long time, they don't continue that way indefinitely. These things move in trends and cycles, and there is a time when they get out of favor, just like there's a time when they're in favor. And you can listen to podcast number 392, where I talked about what stocks to invest in instead of the FANG stocks. There's also some talk of the economy slowing down a bit. And there are some signs of that happening, although not extreme. But we have also had what's called an inverted yield curve, which means the long-term rates go below the short-term rates. And rather than a normal chart where the longer you go out on the chart, it would be an upwardly slanting curve, it means it goes the other direction and it's a downward sloping curve, meaning that when short-term rates are higher than long-term rates, it doesn't always happen this way, but it can be a predictor of a recession coming in the future. Now, while there are signs of the economy slowing a bit, it's not dramatic. These are slight hints right now. There's nothing pointing at a definite decline in the market, so I'm not expecting any big recession right now. Remember, we're in the third year of the presidential election cycle, which is usually the best performing year. The fourth year, next year, is usually the second best performing year. And it's usually the first and second year of a presidential cycle where a lot of the bad stock market news works its way out because things that are unfavorable to the economy are typically passed during those years, so that by the time re-election comes around again, the economy's pretty well going smoothly. Another thing is that while the Federal Reserve was talking about raising interest rates, they came out earlier this year and said we won't raise rates at all this year. Well, now Chairman Powell has actually said he might even consider cutting interest rates by 0.25% this year. And certainly the way the interest rates are pricing that in, it looks like the markets are expecting at least 0.25% cut by the Fed. This would be very bullish for the market. But having said all that, I think the Fed would cut interest rates if the stock market got into trouble. There's no need for the Fed to cut interest rates as the market's going up. But should we have some kind of a panic, let's say the stock market drops by a couple thousand points in a day, that could be a time when the Fed would come in and cut rates by 0.25%, which would tend to send the market back up again and be very bullish for the markets. So any panic that we see in the market, I'm expecting to be a really great buying opportunity. So if you don't have some cash freed up yet, I suggest you get some freed up and have a little bit ready for that good buying opportunity that could come sometime between July and October, let's say, and see if that doesn't happen and provide us with a great opportunity to buy some bargains. Another thing that we can do is look at investing in some smaller company stocks. Smaller companies aren't going to be impacted by the tariffs. They typically do better in recessions, and they are solid growth companies that have a lot of potential to get a lot larger. Whereas many of these mega cap companies have grown so much, you just wonder how much bigger can it really get? I mean, trees don't grow to the sky. So these things move in cycles, things get dramatically overvalued, and then they move down and become undervalued at some point. I think small caps are really an exceptional opportunity right now. There are companies that are coming on strong with strong consecutive earnings quarters, that are growing fast, that are in the right markets, that are getting a lot of cash flow coming into them. I would seriously make sure that you have some small company stocks in your portfolio, because the one mistake that I see is a lot of people just buy the S&P 500 and think that's it. They think, oh, I've covered it all. No, you haven't. You want to have some medium-sized companies in your portfolio and some small companies in your portfolio, not just the mega caps and the large caps. So I think in the future we could see a panic. That's that sharp decline where the market is trying to find fair value. It's trying to reprice itself lower. It's not really sure where that fair value point is right now. And it can happen that people get into a panic. There can be waterfall sales happening, and therefore the market actually gets undervalued during that time and can be a spectacular time to buy. So I think it's quite possible that we see a sharp decline, but I only think that would be temporary and, again, a great buying opportunity. Make sure you have some cash set aside to take advantage of that, because those times when people are in a panic are when the real bargains present themselves. I promised you that we would have another giveaway, and I'm happy to have this giveaway during the month of June. I'll be giving away 5 sets of Wealthy Mindset Blueprint audios valued at $197 each, 5 Wealth Heiress books personalized by me, and 2 wealth mentoring sessions with me valued at $500. All you need to do is leave a podcast review on iTunes or a book review on Amazon for the Wealth Heiress book, and your name will be placed in the hat for each review that you do, but if you do both, you'll get 3 entries into the drawing. I'll reveal the winners on June 30th, and we'll have some fun with giveaways. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.